Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, over the course of the last few weeks, the market for the US dollar index has been relatively bullish, holding this uptrend since May 2021. We can see that the support is coming in around 93.90. From the last week's strong bull candle, the market has nearly reached its objective, which was at 95.30.55, after reaching a high around 95.25, being a 16-month high. Looking at the technical aspect though, it is assessed that the market may see one more test up, but get a little bit on the cautious side, due to the fact is that as we're getting very, very close to its objective, the euro on a weekly outlook is getting very close to its target of 113.50 or 113.50.70. I feel that the market is getting a little bit oversold and we're not too far away from potentially seeing a correction. If you look back on how far this market has been in a somewhat bear trend, it's coming in around the April-May area, which was these three tops, which is on the weekly, and therefore around 122.5. And therefore the view should be that we may see just a little bit of profit taking coming back into play as we get a little bit closer, which is only about 100 points away to that base. Looking at the Australian dollar, the market has respectively held at the 72.80 level after posting an intraday low of 72.76, has rebounded. At present, the market is looking back towards this break level, which is seen around 73.50.55. Seen a high of 44 today. Let's see if the market can break. If so, then I do expect to see a little bit more of the bullish recovery and maybe looking back up towards 74 cents. But one step at a time, because the 60-day moving average is holding around that area and it could prove a little bit of a tough level to break. The dollar yen, after its very strong candle last week, after the unexpected CPI number coming out to around 30-year highs, that is, the market has staged a somewhat turnaround on Friday, backing away from that key resistance level around 114.50.70. I do feel that yen's strength may come back into play and therefore look back towards 113.20 and the base seen at 112.65. Like with the euro, the market is looking a little bit to the bottom side of the range for sterling. And that is seen around 132.80 to 133 after earlier last week saw a bit of a weak play. Nevertheless, the market is trying to attempt to recover but still remains in a negative sentiment as it holds underneath the midway point on the RSI. At present though, I would feel that there may be one more down test towards that 132.80 to 133.20 area, and may see a bit of profit taking as the market has been short since around 138. As we coast sideways for CAD yen, the market's still respecting that level of 90.30 and with the cap seen at 91.40. In light of the pattern here, we may see another up test. Now we'll keep an eye on that 91.40 because if we do clear that level, could see another or at least another rally that is back up towards that 92 level. But at present, I'm not going to get over excited about this current pattern as it has been traveling sideways. First of all, back in October, and now breaking down, we're going back into a 90.30 to 91.40 range. Wrapping up with gold and oil, the market still appears to be contained by that level of 1,870. However, backing away slightly from the RSI, keep an eye on this pattern here, although the ADX is still holding to a bullish trend. We've got a hanging man in place here on Friday, so we might see a little bit of profit taking back to about 1,834 and reassess. And looking at oil, well, the market still remains focused on that 78.70 level since backing away from those highs around $84 a barrel. Now a close under there, at present though I am neutral, but a close under 78.70 would give further indication towards a slide to 74.80. Well, that wraps it for today. Thank you very much for joining me, and as always, look out for the interest rate pool. I hope you enjoy the great start to the new week.